Portfolio Builder members, welcome to your evening update. It's Thursday, and we're looking at the S&P 500, which shot up into the close, which is good for our trade coming out tomorrow. And the big news every Thursday for our program is to currently track the change in the Fed's balance sheet. Now, the general idea is that if the U.S. government is having a hard time selling its debt, then we can expect the Fed to have to pick up the tab. Its balance sheet increases, and that's really been extremely bullish for stocks. And it has caused its balance sheet to grow substantially, which gives us a new fair value on the SPY, which could be in this 330 range. Now, what I'm looking at in this chart is just the change of price so far in 2020. And you can see to start out, we rushed up 3%. Then a few days later, gave up that entire 3%, bounced back up 1.4%. We're near a break even this morning and then shot up into the close, presumably on strong data from Amazon. And so really the top companies in our SPY portfolio are having record sales back to back. So Microsoft has had 2 quarters of record sales or profits. Apple continues to have similar results. And now Amazon just printed some great returns as well. Facebook, perhaps the first week earnings so far this week. Now, the Fed's balance sheet is not the only balance sheet we want to track. The other would be how much debt we're able to sling into the corporate bond market. That's another key driver of stocks. And so essentially with the chaos that's been erupting, whether it was the Middle East fear and now the coronavirus outbreak, the U.S. government is having no trouble whatsoever selling its debt. And now the stock market's really lost its training wheels, at least from the Federal Reserve, in terms of it growing its balance sheet. And this could last for a foreseeable future, as the coronavirus is still not contaminated, or rather contained, and continues to cause countries to shut down borders, to shut down transportation, and will almost certainly hurt GDP in the emerging market area. So what's my expectation? There's the potential, as long as we don't see the virus starting to spread in the United States, for another repeat of 2018. And that's where money floods into U.S. products, including the SPY, the TLT, and the U.S. dollar. Currently, our portfolio is positioned with a 330, 327 collar on the SPY. So we would love for the SPY to go up to as high as 330 before we roll the position over into the weekend. And don't forget, it's the Super Bowl, so I highly doubt very much negative news from U.S. officials between now and before Monday in terms of any warnings about the coronavirus getting out of control. In fact, they're telling us, don't panic, everything's fine. China has this under control. Just worry about India. Now here's a look at the TLT, which has had a nice rise. I do expect that it will continue to rise. Now remember, in the beginning of the year, because of the Phase 1 trade deal being signed, I was tracking emerging markets alongside the SPY, expecting both to rally together and for the bond market to have trouble, which would continue to force the Fed to expand its balance sheet. But now we're not having that experience because China has essentially quarantined 90 million citizens in the center of China. So this is almost surely going to cause a slowdown in the entire region, which is why we're seeing the bond market bid and the TLT rise. So if the TLT is traveling higher, the government's able to sell its debt without having to clog up the U.S. banking system, which means the repo markets will operate which in turn means the Fed's balance sheet won't increase. And in fact, that's been the case for most of January, is that their balance sheet is either reduced or remained flat. And previously, we'd actually seen their balance sheet from October, November, December increase by a rate of $100 billion per month, which was rocket fuel for the stock market. So if we want to really become very bullish on the SPY going into 2020, and the Fed's not increasing its balance sheet because of crises in emerging markets, what's going to expand the PE multiples? Most likely it'll be an expansion of corporate debt, and LQD is your best measurement for corporations' access to selling debt, what the rate will be and how popular it is. And so LQD is at all-time highs. This means your Amazon, Microsoft, etc. has access to super cheap credit, which they're using to reduce the relative number of shares available, which boosts your earnings per share and can continue to fuel this rocket ship higher. Now, I do think the only caveat to this at the current spot is, again, that coronavirus starts to spread in the U.S., I do believe we'll get a panic here stateside. Now, the other position we're long is GDX, which is the gold miner ETF. And it's a pretty simple calculation for me. If spot gold is above 1,500, that provides a huge profit margin to gold miners. And the top gold miners are able to mine gold for less than $1,000 an ounce. So with spot gold traveling higher so far in the last 2 months, I want to be long GDX. And the bottom line is that in the biggest economies, they are printing GDP. That's positive, sure. But on the flip side of the coin, they're also expanding their debt at a faster pace than they're growing the GDP. So that's a recipe for expanding the supply of money. And as long as that's happening at a faster rate than the miners can dig up gold, well, then we can expect spot price to continue to grow, and the profit margins for miners, so long as they don't run out of gold to mine, to continue to drive its stock price higher. And so if we look at GDX since 2019, we can see it's been in a bit of a trading range in the last several months with a little bit of drawdown, but it's up substantially, approximately 44% since 2019. And I do think this has a lot of room to grow. And in fact, I'm expecting it to travel far higher than it did in 2011, which would push it up at least 100% to get to $60. And the bottom line is that if the GDP is greater than the expansion of debt, then there won't be new money created. And thus, that's very negative for gold. On the other hand, if we're creating more debt than GDP, then the money supply must grow. And then that's very bullish for gold. So right now, our debt to GDP is 106% last year. And our GDP print was 2.1. So if you compare those two, we are spending versus making 6-2, or a 3-to-1 ratio. So for $3 of expense, we're creating $1 of profit. That's obviously not good, but if we can get the debt growth below 100% and get the GDP up above 3, then America could be back on a healthy track here, which is what they say they're trying to do. But just so far, we've been going in the wrong direction. Now, arguably, we had to fight a trade war over the past 2 years to try to bring manufacturing back to America. So you could definitely understand why they might think that a step back is required to take a leap forward. But at some point, we must cut down the government spending, which is going to come at the cost of slowing down our GDP. Now, in this chart, we have the ETF EEM. And if you follow Jeffrey Gundlach, Stanley Druckenmiller, Ray Dalio, a lot of these guys, even Buffett now, they're all about how we need to invest in China and Asia because that's where all the growth's going to be. But, of course, that comes at the cost of having to deal with a lot of opaqueness in accounting, corrupt governments, and, of course, dictatorships, which can be used to manipulate and make life hell for investors. And so we can see emerging markets just hasn't panned out really since 2008. And so our whole thesis going into 2020 was that emerging markets and the U.S. stock market could rally together and that bond yields would rise because there would be so little chaos to be worried about low growth, and we would have a recovery, a global growth recovery. And so that worked out for a little bit. Let me zoom in here. And so we can go back to that magic moment in September when the Fed had its emergency meeting, which was supposedly about the inverted yield curve. But that's really when they started just massively pumping money into the banking system to the tune of $100 billion a month. And again, that was happening until January, and that's completely grinded to a halt because once again, the government is successfully selling the debt to other investors and not clogging up the banking system. So the Fed doesn't want to expand its balance sheet unless it has to, because they know that will weaken the dollar. But we can see emerging markets, the second that meeting happened, and then we immediately had the phase one rumors, the rally was about 18%. Now, it did give up 8% of that all of a sudden, at the same time that the SPY was traveling higher. And so that was reason for alarm. Now, I never would have dreamed that we would be realizing the reason why emerging markets was crashing was because there was an epidemic virus spreading that the government was covering up. But that does seem to be the case. So let's go ahead and zoom in even more and compare the SPY against emerging markets so we could understand when the first alarm bell came off that perhaps there was trouble in China, that this global recovery scenario may be under threat, and rather than wanting to be short the U.S. bond market, expecting yields to rise, which is perfectly easy to understand. All you got to understand is there's massive U.S. debt being sold and a limited demand for that. And without a crisis, that demand is not sufficient for the appetite of the U.S. government to spend. So let's zoom in once again and look at how the emerging markets and the SPY broke paths, indicating trouble in China and that we need to reverse our position on the TLT until we do see a recovery in China, which without question can't happen if they have half the country in quarantine and there's no travel. It's just a mess for sure. So let's compare. Okay, so here's where it really broke paths. We can see in the orange line the SPY, and in the candle chart, which is green and red, the emerging markets, that they broke paths right here at the end, but they had been very correlated, just tremendously correlated. And you can see one goes up, the other goes down, and vice versa. And this was when the trade deal was working in favor or working against positive progress. And then the most remarkable thing happened right after we supposedly had this great deal where China's going to pick up $200 billion a year in U.S. products, reducing the trade deficit from $500 billion to $300 billion, which, funny enough, was the exact demand that they gave China exactly 2 years ago. They signed that. The text talks about the banks in the U.S. picking up bad loans in China. To me, that really meant that we're going to help them fund and own a piece of their Belt and Road Initiative, which everybody wants a piece of. because it represents something like $1 trillion in loans to be written per year just to fund that project for the next decade. So that's a lot of loans. That's a lot of interest to be made. And all the big banks are watering at their mouth to get a piece of that. And right when the whole world was going long this trade, right when Stanley Druckenmiller does his December trade alert for Bloomberg, where he gives away his picks, it all fell apart. And so I'm sure he's pivoted by now as well, probably before us. I'm sure he has better intelligence and inside information than we do. But at the very end of December, right before the New Year's, he was the big dog who everybody listens to him as though he is Jesus himself, to go long emerging markets and to go short the long end of the treasury curve. And what happened next? Well, first we had chaos in the Middle East with Iran, who, of course, we've been suffocating economically. And next, we have the virus outbreak, potentially of the century. So now we know why emerging markets has broke path. I was wondering why it wasn't keeping up. And as you know, I was touting, emerging markets going to outperform the SPY. And if it doesn't, we have some alarm bells to go off. So sure enough, the alarm bells were going off well before the news hit. And in this case, we can clearly understand the problem. So again, we're short emerging markets going into next week. The Chinese were supposed to open their stock market tomorrow. Let's jump over to their stock market. Now, it's important to understand the EEM ETF is a U.S. product, I believe, by BlackRock. BlackRock and Vanguard control something like 80 or 90% of all ETFs, which represents a huge chunk of all the money in the stock market. And they represent trillions and trillions of dollars of assets under management. And they'll never sell. So it's really 10% of the market that's buying and selling and creating the volatility, perhaps with leverage, mostly your hedge funds trying to do that. And then you have these massive money managers who all they want to do is collect, and spread out the money into as many assets as they can and just protect them and to collect fees and to grow that wealth. So that's really your two big players making the swing. Most of your retail investors just buy and hold and have no idea what's going on. And this right here are the some of the markets that you actually have exposure to through ADRs in the emerging market ETF. So it's not actually, it's like a proxy to these real assets and not the actual asset itself. And so let's go ahead and look at the most important one, which is different indexes in China. So we'll start off with this one. And we can see the last trading day was on the 22nd. That was Thursday. And, of course, they waited to warn the public, I think, on the 23rd, which, if we remember that citizen in Wuhan complaining, why did the government not tell us to wear masks until the 23rd? I believe that's literally when they started warning people, sometime around the 22nd or 23rd. But people were out and about eating food together, having parties, celebrating, and they were having these cases starting to proliferate way back in early December. So the Chinese definitely covered it up, protected their markets, tried to prevent a panic until it was really just too late. And now the entire China's a ghost city with everyone freaked out, staying in their apartments, hoping that the plague will pass. And so here you go. There's their market. I'm going to zoom out to 1 month. And you can see, well before there was any bad news, the insiders started selling hard. And I expect that these indexes will be down significantly Monday and continue to sell off until things get better in China, which could be quite some time. Now, they're estimating that the peak will hit in a week to 2 weeks, and then from there it will start to slow down. So with the best case scenario, even from China's own state media predictions, quite likely they'll have a week or two of market selling off at the best case. Now, if this really turns into something nasty that is hard to stop, which so far it looks like it will, then there could be some significant selling in Chinese equities, and this could be traveling at least 20% lower. Okay, so what about the South Korean stock market? Well, you can see it's had a pretty violent sell-off over the past 8 days since January 21st. If we zoom out a little more, you can see it was doing a very similar path. And again, I do suspect it will continue selling off in general over the next several weeks until this virus does stop growing exponentially. And so that's really a key thing to watch, not just China's data, because most likely they're so overwhelmed they just simply can't keep up with the case count. They're turning people away. They're saying they don't have test kits. They've shut down the transportation. So they're not even trying to really keep count anymore. In fact, they're trying not to keep count so people stay home and either beat the virus or die. But whatever they do, they just don't spread it to more people. And the way it works is you build up antibodies so that you can only really be affected, at least by this strain of the 2019 novel coronavirus, one time. Once you've beat it once, you are now potentially immune unless it mutates, which is what happened with the the Spanish flu back in World War I. And so the second mutation of that was what really caught people off guard and killed millions and tens of millions of people. Okay, here is the Hong Kong stock market, which has been falling off a cliff since a little bit before South Korea or China, way back on the 15th. And now we can see thousands of people trying to escape out of China into Hong Kong. Hong Kong's freaking out, demanding they close off China. So yes, I really don't think we're at the end of the pain, at least in Asia. Now, can this create a effect of people rushing into U.S. products? Certainly, which we may once again benefit from here on the States, at least for now. The German stock market looks remarkably strong considering how attached to the hip they are to China. And although that looks sharp when we zoom in on the 1 month, that's really not a big change in price. But their bond market is indicating a lot of trouble, as we saw in our webinar today earlier. Okay, I'm moving to Twitter now for some top headlines. As a Chinese, I feel regret, but I also understand this decision of the WHO. China is taking actions, adopting measures stricter than those for SARS. I believe there's a high probability that things will get better before long. And the breaking news was that the WHO has declared a global emergency from the coronavirus. Now, interestingly enough, the TLT did sell off a little bit after that news hit, and stocks went up, but I do believe that was primarily from the hot earnings coming out of Amazon, and less so from what we already knew from WHO. From the long view, who, funny enough, as far as I know, has been short the SPY all of this year, tweets, Amazon just added $100 billion in market cap. Amazon's massive earnings beat. Operating income increased to $3.9 billion in the fourth quarter compared to $3.8 in the fourth quarter of 2018, which is laughable. And again, it's because of stock buybacks. Makes your earnings per share go up when there's less shares and drives stocks higher. And so he's being sarcastic, obviously. StockCat says the first confirmed case in New York City and all hell breaks loose. I'm sure there's already cases being monitored in New York. Of course, one of the richest cities will have lots of people flying in and out of China for business-related work. This is from the Justice Department, and again, people are trying to figure out what is causing the coronavirus. And this happened to be released on Tuesday. Harvard University professor, 2 Chinese nationals charged in 3 separate Chinese-related accounts. And they had received $15 million in grant funding. And again, it was related to secret military-related information that this renowned scientist from Harvard had access to, and it was all related to biological research, which could be connected. This guy's a character hipster trader. Algos just learned everything about global pandemics during the 10 minutes you watched the WHO press conference, laughing that stocks went up on the announcement that we had a global emergency. China's Hubei province reports 42 coronavirus deaths, now totaling at least 212. And remember, they are having reporters going and talking to the crematoriums, and lots of people are being hushed over to these who have not been diagnosed. So I think the count is far greater than 212. So we may want to start focusing on the growth in different regions where perhaps we can trust the government a little bit more. It's hard to trust any government these days because, again, they're all motivated to suppress the truth, keep panics down, and try to just fix the problem on their own. And wow, another tweet from Trump, of course, after the stock market. Working closely with China and others on the coronavirus outbreak, only 5 people in the U.S., and all are in good recovery. Don't worry, enjoy the Super Bowl, of course. And this is Eric Townsend of Macro Voices, great YouTube channel. WHO goes out of its way to explicitly decree that there is no need to restrict international travel. I fear that this organization is so corrupted by politics that it is betraying the public health. This is time for science, not politics. State Department authorizes personnel to evacuate China due to the coronavirus. But the WHO just said everything's... Finally, a senator saying something that sounds half logical here. The Wuhan coronavirus is a catastrophe on the scale of Chernobyl for China. Only Chernobyl was localized, although, of course, that radiation could have easily spread around the world, as China's virus is. The coronavirus is spreading worldwide. Last night, confirmed cases increased by 30% in China. The true numbers are likely much higher.
Talk about the biggest and the most important story in the world, the Wuhan coronavirus. This coronavirus is a catastrophe on the scale of Chernobyl for China. But actually, it's probably worse than Chernobyl, which was localized in its effect. The coronavirus could result in a global pandemic. While you were all sleeping overnight, the number of diagnosed cases in China increased by 30%. Now, let me be clear. That's not new cases. That is just newly admitted cases. It is probably several orders of magnitude higher than that. I want to talk about the
WHO says does not recommend limiting trade and movement due to China virus outbreak. This message was approved by over 10,000 coronavirus cases. This is a video that did make it out of Wuhan, and I'm going to read its translation so we have a little bit of insight as to what's going on. And the translator just says this is very rough translation. I reorganized the flow a bit as he jumps around. This video is a bit long. Usually I do short videos for WeChat. I'm in Wuhan. This is my 6th day. My name is already a sensitive word or a censored word, so I can't put anything on WeChat. Don't put any of my videos on WeChat. Your account will be frozen. Mine's already been frozen. In the first few days, I've been to a few hospitals, been working with some volunteers, been to some markets. Yesterday I went to the 6th People's Hospital. A lot of doctors there have been reported to have gotten ill. But doctors won't accept my interview. They all have been told not to do interviews. Even some have their phones taken away, we think. We know that 8 doctors were arrested before in December. Some volunteer groups are helping deliver stuff to patients in hospital. I joined them for a bit. They're really tired. People don't believe in the China Red Cross, so people send donations. Lots of small parcels have been sent direct to the hospitals. But they need sorting out. It's really inefficient work, and hospital staff don't have time. Volunteers are helping with that. I also, at the Hashinsha Hospital, lots of staff are working 24 hours, no rest, sleeping 2 to 3 hours a day. Most people are shut at home. If you don't have transport, it's really hard to get to the hospital. And if you go, some people are not getting checked in. Each area is only allocated 4 taxis. That's 4 taxis per 1,000 people. If you need a taxi, you have to call the district management. It's impossible to get one. So if you don't have a car, you have to walk to the hospital. But in Wuhan is huge, so many people don't go to the hospital. Call 120 for an ambulance, but there aren't enough. Taxi drivers in the middle of December, they already knew there was a serious disease. Why can't they say it's SARS? It's just as serious as SARS. The Wuhan police haven't apologized now for arresting people talking about SARS. I tried getting tested at a hospital to see what the process was like. They asked me questions and told me to get in queue for testing. I went with a patient to Tongji Hospital. Lots of patients had been to multiple hospitals. I was genuinely scared. The corridors in the outpatient department were all full of beds. Lots of people were breathing with masks and oxygen tanks in the corridors. They had to be seriously ill. Doctor said we need to select which patients to do the tests on. There are only, I was told, 100 or several hundred test kits per hospital per day. There aren't enough, so doctors need to select those to check. So some people have been to 5 to 6 hospitals trying to get checked. All hospitals say they don't have spare beds. I'm really scared now. People are scared. I'm envious of CCTV. They're safe when they do interviews. They've got all the clothes and kits. I can't go onto the wards, so I'm just in the outpatient department. I have a mask and a coat. I thought of contacting Cajun journalists. No other media is here, but they don't take my messages. I heard a Hong Kong journalist was still here. I was excited to talk to him, but when I contacted him, he said the last 5 to 6 days he's been at the hotel. His headquarters told him not to go out. No one, journalist, is going to the front line at the hospitals. I've mostly been in the hospitals the last 5 to 6 days. I'm really scared. I feel under a lot of pressure. I've got some breathing problems. Maybe it's the mask. Only one guy knows where I'm living. The most important thing is they lack testing kits. They lack other things too. Public security called me, asked me where I was. They asked me to chat. They asked my parents to talk. I'm afraid. In front of me is disease. Behind me is China's legal and administrative power. But as long as I'm alive, I'll speak what I've seen and what I've heard. I'm not afraid of dying. Why should I be afraid of you, Communist Party? So there you have it, folks. The WHO declares it a global emergency, but tells you to keep on traveling. Don't want to mess up the profits of the corporations. That would be the end of the world, right? All right, we'll see you guys tomorrow. We have our SPY trade. Also, we're looking forward to where China opens next Tuesday, and we're currently long again, TLT, GDX. No changes to the positions. Short on China, long on America, and long on gold. Thank you guys so much. See